It's about understanding the narrative of everything. Understanding the narrative. What do the feds want? You know what I'm saying? What do the feds want? What does the economy look like? What understand getting a big picture of that, right? And then once you got a big picture of that, you got a you don't nobody know what the Fed want for real. But what's the narrative they painting? What's the narrative they putting out there? Because whatever narrative they painting, that's what the algos are going to be looking for, right? The algos are going to be looking for is the economy lining up with the narrative that the feds are painting. If the economy is lining up with the narrative the feds are painting, then the algos are going to like that, right? And then understand where price is now. And it's all fractal. It's all on every time frame. It's like from the top to the bottom, from the yearly to the monthly to the weekly to the daily to the 4 hour to the 1 hour to the 15 to the 5 to the 1. It's all fractal. You know what I'm saying? The higher time frame, the more weight it carries. The lower the time frame, it starts to develop earlier, but remember, it's more weight higher. That's why I swing trade, because I'm not a day trader. You know what I'm saying? I day trade, I dabble, but even when I day trade, I buy my positions at least 2 weeks out, right? When I day trade futures, I dabble in the futures, but it's like when I take a futures trade, I got to be 1000% certain when I take a futures trade, because futures, you got to be right. You know what I'm saying? On the direction. It's all direction. And plus, unless you got big money and you're just swinging the futures, so and you treating the futures just like options, you just, you don't have to worry about the Greeks. But once you understand what the Fed want and you understand what the algos are going to be seeking, right? Then you look at where is price now. Are we in a discount market? Are we in a premium market? Right? Then you'd be like, okay, we're in a discount market, right? We in a premium market. Then you get synced up on the different time frames. We're in a discount market on the year, right? We're in a premium market on the month. In the long term, you're going to be looking for reasons to buy for the long term. On the yearly term, meaning looking 3-4 years out, because you're in a discount market on the year. You know what I'm saying? Here's your year box. Let me get my box in there, right? So we got our year box, right? You know what? I'm gonna get my drawing tools out. And I appreciate that, Stacks. She had a beautiful birthday. She really enjoyed it. The boys got a Pandora bracelet, because the other Pandora bracelet, it broke. And so when we went back, they was like, do you have the lifetime warranty? I said, I don't know. I was like, can you look it up in the system? I don't. I got it like before the pandemic. And then they said, yeah, let's look it up in the system. They're like, oh yeah, you got the full-time warranty. And I said, okay. Said you got a lifetime warranty. I said, okay, then let's do that then. She like, well, we got to send it off. We have to send it off. And I was like, okay. Well, we're gonna just buy her a new one so she can have it on her birthday. Her birthday is Tuesday, and it's Monday right now. So no, it was Sunday. It was Sunday. I was like, it's Sunday night, and she needs something for her birthday. And so I let them buy her a new Pandora bracelet, and then they sent the other one off to get fixed. And so, and then we bought her some non-dairy ice cream sandwiches and some vegan mochi balls. It's like some kind of vegan ice cream inside of a little like covering. We didn't break it out last night. We didn't eat it. By the time we got back from dinner, we took out to dinner, She loved Olive Garden, so we took her to Olive Garden for dinner. And then, you know, that was it. She had a good time. She really enjoyed everything. She really enjoyed everything. All right. So all right. So here we go. Right. So for the year, right, we've taken out last year's low. Right. We've taken out last year's low. Right. We took out last year's high by a little bit. You come up right here. Right. Last year's high was, man, I can't see that. Can y'all see that? Y'all tell me what that say. 47.99.75. This year's high was 48.08.25. So we took out last year's high, then we came down and we took out last year's low, right? Right. So looking at the yearly box, right? That was last year's yearly box right there, right? Y'all know how I do, right? So we've taken out last year's high. So we moved the box top to the new high, right? We took out last year's low. So we moved the box top to the new low, right? That was our dealing range. Since we took out the high and the low, now this is our dealing range, right? This is our dealing range. Equilibrium for the year. Equilibrium for the year. Get off of there, magnet. Equilibrium for the year. I probably could have did this up there, but my plan was to draw some. My plan was to draw some. Is 41.51, right? Equilibrium for the year was 41.51. What time is it, boys? 9:26. All right, so equilibrium for the year, right? So on the year, we're in a discount market, right? So, like I was saying, on the overall big time frame, on the yearly time frame, right? We're in a discount market. So if you're looking on the yearly time frame, right? If you're looking 5, not even 5, right? You're looking 3 to 5 years out. Ignore that, right? If you're looking 3 to 5 years out, you're in a discount market. So you're looking for opportunities to buy, right? Are you trying to buy every single day? No, you're not trying to buy every single day, but from the long-term perspective, you're in a discount market on the year. From the yearly perspective, you're in a discount market. Why do I say that? Because we took out a yearly high and then we fell all the way down. We took buy side liquidity and then we came down and took out sell side liquidity. Now, sell side liquidity has been taken on the yearly. You're in a discount market on the yearly. You know what I'm saying? So you're looking for reasons to buy. We came down to a yearly fair value gap right here. Pretty much the mean threshold. Looks pretty mean thresholdish to me, right? So we came down to a yearly fair value gap. Does that mean we're going to blast off to all-time new highs? No, it don't. But we've run sell side liquidity, right? And we're wicking up off of it on the yearly basis. So now, you know what I'm saying? Y'all know how I feel about wicks, right? If you're not in right now, you could be using this fractal time to say, okay, we took buy side, we came down and took sell side, hit a discount PD array, reacted off of that PD array, right? Now, in 2023, because this is the yearly calendar, this year ain't over yet. In 2023, wherever we end at, if we end around like we've taken out sell side, and I'm looking for it to come back to at least equilibrium, right? If we come back to equilibrium, maybe even get into a premium, I'm expecting price to come back down and revisit this wick. Will it take out the sell side again? We don't know, but we using the tools that we've learned on it's all fractal, and we're applying it to a yearly chart right now, right? So once we get back to at least equilibrium, we're looking for it to revisit this wick. And what are we looking for? We're looking for opportunity to buy for the long term, because it's in a discount market on our yearly time frame, right? We're looking for our setup. If you are a fair value gap trader, this was your risky Randy, reckless Rachel entry on this fair value gap right here, because we made the fit, we came up, we set the fair value gap, and this is the first time we touched it. We didn't fill it all the way in, right? So, but risky Randy, reckless Rachel, when the first time it touched a PD array, a fair value gap, a order block, a breaker, they going in because they're trusting the process that we're going to bounce off of it, right? You could be in something long now, and then it's like, but you're not looking for it to make all-time new highs. You got a profit target. My profit target is when we get back to equilibrium. You know what I'm saying? My profit target is when we get to this monthly fair value gap here. My profit target is when we get back to a premium PD array, order block in the premium. You got a target to get out, right? On the yearly. Now, when it gets back to at least equilibrium after coming down to a discount PD array, it's in a deep discount when it ran this sell side because we set a new low. You know what I'm saying? Now, when it comes back up, you're looking for opportunity to come, because if we get some kind of break in market structure on the lower time frame, because it starts to develop on the lower time frames. You know what I'm saying? By the time you get a break in market structure on the yearly, you've already set, you need another year candle. You would need another year's candle over here somewhere, whatever it is, right? And then this would be your swing high, and then another year down here, that's your yearly breaking structure. So that's 223, 24, if that's 2 years waiting on the yearly breaking structure. You see what I'm saying? Now, taking that same logic and dropping down to the monthly chart, right? Boom, we go down to a monthly chart. Boom, monthly chart, right? Right there. We came back up. We hit the yearly equilibrium right here on the months. And from May, June, July, August, we poked above into a premium on that yearly. September, October, we came down. October, once we got up to we was at the equilibrium and we sold down, and that's when we hit that yearly fair value gap. We took out the sell side liquidity, right? And now we're heading back toward the yearly equilibrium. That's the yearly now we're heading back there. So now, if you happen to be an inside, like if you went long off of this monthly fair value gap down here, which was also the yearly fair value gap, they call that confluence, right? If you went long there and you said, okay, I'm taking it back to equilibrium, right? You're still in your long positions, right? Waiting to get there. If you didn't get in anything long for the long term, so be it. The market's scary right now. Nobody's trying to get in stuff that's long time or to long term. Everybody's bearish. I'm not mad at you, right? You're waiting on the confirmation. You're not Risky Randy, Reckless Rachel. Risky Randy, Reckless Rachel got in. Uh-oh, I ain't on the draw no more. Let me get the janky draw tool. I get the janky draw tool. They got in right down here. That's where Risky Randy and Reckless Rachel got in at. Because why? That was the first visit of the yearly fair value gap. That's when we hit that yearly fair value gap. So they went in. That was the first visit. They went in. But everybody else that's waiting on the confirmation, you know what I'm saying? They Risky Randy and Reckless Rachel, they're in. They saying, hey, when we get back to the yearly equilibrium, I'm shaving, I'm taking profit, whatever. You know what I'm saying? But then you may have somebody say, okay, I'm not going to equilibrium. My profit target is this monthly order block right here, right? I'm not getting out until we hit this monthly order block and it gives me some kind of reaction. If we come up, boys, y'all let me know when it's 8:40. What that? Christopher? Y'all let me know when it's 8:40. Did you take your medicine, Chris? Did you put your the cream and your lotion on your face? Okay. All right. I'm gonna take it up to this order block, mean threshold, monthly order block. Boom. When we hit this right here and we get a reaction off of that right there, right? I'm not gonna just jump right out. I'm gonna look for like some kind of breaking structure on the weekly. If I hit this right here, if I get a breaking market structure to the downside on the weekly, I'm out of there. Right? Then once we do get that breaking market structure to the weekly, right? If we come back down to the discount, right? You could be looking, say, okay, boom. When we hit this monthly order block and we bounce and I get a breaking market structure to the upside, I'm in there. That's when I'm going in. You know what I'm saying? It's all fractal. It's all about learning. It's all about learning the one, to trust the process, two, to understand that the price is all fractal, and three, to have a plan, right? Right. And I was circling this stuff so it'll stay on the thing. I actually started circling it because I was just on the wrong thing, but in the middle of it, I was like, oh, I need to circle this anyway. So when I drop to the lower time frame, it'll be there, right? So boom, that was where Risky Randy and Reckless Rachel went in right there on the weekly. See, it's all fractal. It's all fractal right there. You got what is this right here? That's a mitigation block right there. You got a mitigation block right there that it hit. It's got a fair value gap on the weekly there that it hit. It's reacting off of it. You know, we had a break in market structure, came down to this PD arrays, and we're pushing back up. We're still in the discount market on the yearly. That's the yearly equilibrium right there. We're still in the discount market on the yearly. So in the long term, right, even though it's scary, even though the market is bearish, even though the market is dying, for the long term, this is the time to be looking for your opportunity for the long term, according to your plan, according to your thesis. I'm looking for reasons to buy. Am I saying buy right now? No, you're looking for the reason to buy. You know what I'm saying? Yeah, the market's scary right now. Yeah, the market bearish right now. Yeah, we've been falling all year. But big boys buy on down hours. Big boys buy on down days. Big boys buy on down weeks. Big boys buy on down years. They don't just arbitrarily buy during this time. They buy strategically, but you buy on downturns and you sell on upturns. You buy in the discount. This is the discount. Oh, I need a screenshot. Right? This is the discount market. Y'all don't mind my spelling. This is the premium market. Discount, buy, premium, sell, right? You buy on down moves, you sell on up moves. You buy in the discount, you sell in the premium, right? And this is for the overall picture of the discount and the premium. There will be opportunities to sell in the discount. There will be opportunities to buy in the premium. But that's when you start looking at the smaller time frame of, okay, we're bearish, right? So I shouldn't always be looking to sell. I should be open to opportunities to buy. Okay, we're bullish. I shouldn't always be looking to buy. I should be open to opportunities to sell. That's when it comes to understanding the narrative. That's when it comes to understand where is price at this time. We're in the discount on the year time frame, right? This is the equilibrium for the year, right? We're heading back to equilibrium on the year, right? If you bust down from the low of the year to the equilibrium, let's just eyeball it. We're going to eyeball it, right? Right around here is the split. So we're in a premium of the discount right now. When you're in the premium of the discount, you can very well find a shorter term sale in this area right here. Why? Because you're in a premium of the discount, and you could very well find a shorter term sale and bring it back to the discount of the discount. And this order block right there, get this stuff off the screen. This order block right here could be your target to get out, and then your new target to buy it back up to the premium of the year. You see what I'm saying? It's all about but that's a shorter term goal. That's a shorter term trade. It's all about understanding the price action, understanding the narrative, understanding where price is. Are you in a discount market? Are you in a premium market? And not being afraid of what's happening right now. Keeping your cool, keeping your I gotta go. It's 9:41. I appreciate y'all. I done ran out of time.